What's up everyone, it's Scotty with Money Investing. So in this video, we are going to be talking about the biggest company in the world, and that is going to be Apple. Apple reported their earnings for the second quarter. Again, I kind of confused myself a little bit. I think it's the third quarter for fiscal year 23. Yes, so they are now in the fourth quarter, and their actual first quarter starts in October. So they reported for the third quarter fiscal year 23. Last night, the stock is down a little bit over 2% at the moment, so I'm going to break down exactly what they reported and why the stock price is selling off. It's actually down almost 3% now, so 3% of 3 trillion is over $90 billion, so that's pretty much how much they're losing in terms of market cap, and they actually might end up below the $3 trillion mark today after the markets open. So I hope you guys enjoy this video, find it helpful. If you do, make sure that you drop a like. Don't forget to subscribe to the channel. Link to our Discord Patreon is going to be down below. It's the first week of the month. It's the best time to join if you want to take advantage of all the deals, all the benefits, all the intrinsic values, our watch list, our buy and sell alerts, options alerts, members only private videos, trading view charts. The list goes on and on and on. There's a ton of benefits included, so links are going to be down below if you're interested in joining our community. So this right here were the numbers. So here's how Apple did. $1.26 in EPS versus $1.19. So beat on EPS. Revenue came in at $81.8 billion versus $81.69 billion. So beat on revenue, beat on EPS, but obviously down on a year-over-year basis, about 1%. So it was more or less flat. This is, by the way, the third consecutive quarter Apple has reported a decline in revenues on a year-over-year basis. iPhone revenue was 39.67, which was, again, below expectations of a little bit under 40 billion, down 2%. Mac revenues came in beating expectations, but down 7%. iPad revenues came in way below expectations and down 20%. And other product revenues also came in below expectations and were up 2%. Services revenue was up 8%, also beating expectations. This is the only and the most important bright spot for Apple at the moment. Gross margins slightly expanded a little bit because of that contribution mix from services. Now, I'm actually quite surprised. And one of the things that Apple absolutely needs to stop doing, which is frustrating the F out of me, is providing no guidance. Guys, it's been over 3 years. The pandemic is over. You have as much certainty about the future as you will ever have. Give us a freaking guidance. Like, Apple didn't provide official guidance again. It hasn't provided any official guidance since 2020, citing uncertainty. What uncertainty? Like, come on. Yes, you're the largest company in the world, but come on. You got to provide at least some guidance. Some numbers need to be put on there. Like CFO Luca Maestri basically said, the numbers are going to decline in the September quarter. Maybe like it's going to be very similar, very comparable to the June quarter. So they're expecting an overall decline of maybe 1%. So 2022 fourth quarter reported $90 billion. So it's going to be roughly under $90 billion in the recent quarter. But that's all, estimates. Like, they need to give us a definitive guidance here, because this is, really frustrating for analysts. Like, we can't really forecast, okay, what are the numbers going to look like iPhone sales wise, EPS wise, what is going to be that fair value? Come on, like, what? It's been over 3 years. They should be held up to the same requirements as all other companies. But anyway, going back over to what they actually mentioned, they said, and I quote, "We expect our September quarter year-over-year revenue performance to be similar to the June quarter, assuming that the macroeconomic outlook doesn't worsen from what we are projecting today for the current quarter. Foreign exchange will continue to be a headwind, and we expect a negative year-over-year revenue impact for 2 percentage points. And we expect iPhone and services year-over-year performance to accelerate from the June quarter. And also we expect revenue for both Mac and iPad decline by double digits year-over-year due to difficult compares. And of course, for both products, we experienced supply disruptions from factory shutdowns in the June quarter a year ago, and we're able to fulfill significant pent-up demand in the year ago September quarter as well." I'm actually quite shocked that Apple is only down 3%. I mean, that's the thing, right? A company like Apple, it's held to whole different standards, right? If companies like Enphase and Fortinet and Cloudflare and like these type of companies like that are still high quality, and they can come out with a miss or a, obviously like companies like PayPal, right? Not great guidance, and yet the stock price pretty much gets dropped heavily, right? 20, 18%, 15%, 12%. Like, these are some pretty substantial moves. But because it's Apple, right, missing on most accounts and then also not providing any guidance, and yet it's only down 3%. We'll see if it actually accelerates, but this right here is the only bright spot for Apple, which is services. And if I were obviously an investor in Apple, and if I were investing in Apple, services would have been like the core of my thesis. Like my entire bull thesis would be built around services because the company's got like a massive install base. We've talked about this in our previous videos, and services is really where the profitability, the growth, the margins, everything is in that one word, services. And you can see that second quarter, third quarter 2023, the overall revenue was 81.8 billion, and 21.2 billion came from services. So 21.2 divided by 81.8, we're looking at a 26%. Like, just think about that, 26%, guys. 26% came from services. Over a quarter of the revenue came from services compared to, let's just go back third quarter of 2021, where only 17.5, right? So 17.5 divided by 81.4, 21%, right? 21%, and then compared to same time last year, which is again 83 billion, so 19.6 divided by 83 compared to 23%. So you can see the slow and steady increase. They're increasing these services contribution by 2 percentage points every single year. They've gone from 21% to 23 to now 26% in contribution margin, and that's really the margin expansion. I know it's a subtle difference, but it's what makes all the difference. Trust me, this is what makes all the difference, because this is a very, very high margin business, right? This is a low margin business, relatively speaking. They can still make a lot of money on selling iPhones and iPads because they've got their process down and they're very efficient. Apple is got the highest return on capital and equity and assets, but this right here is theoretically and of course more realistically a very high margin business. So this is where the key is for Apple, right? To continue to unlock the services growth engine and of course profitability. But net sales obviously have looked pretty modest here. They have seen declines for 3 consecutive quarters on a year-over-year basis. The market doesn't seem to care. And this right here is Cook saying Apple has been working on generative AI for years. One theme that's largely missing from Apple's report this quarter is artificial intelligence. While the rest of the industry talks about AI models like ChatGPT and what they're doing to sell similar technologies, Apple has talked about it far less because it's a product company and doesn't really sell developer tools like cloud computing. But in an interview on CNBC on Thursday, Cook said that Apple has been working on generative AI and other models for years. We view AI ML as fundamental core technologies, and they are virtually embedded in every product that we build. And on research basis, we've been doing research on AI and machine learning, including generative AI, for years as well. But they definitely don't want to be like the showboat of AI like many other companies that are kind of mentioning a lot of artificial intelligence in their earnings reports to kind of get those AI points and of course for the stock to rally as much as they can or make it rally for as much as they can for as long as they can. But Apple has obviously not been that type of company, right? They really want to be show us story instead of tell us story. And I think over time, of course, Apple's involvement in AI is going to increase, and they've already got the Vision Pro that's coming out very soon. It's going to be marked for developers. But that's one way that they are going to be tackling into the virtual reality, the metaverse, and of course, as part of artificial intelligence and machine learning technologies as well. But this right here overall is the net sales, right? So a little bit of a decline in the first 9 months, so 293 billion compared to 304 billion same time last year. Margins also down to 128 billion. Net income is down from 79 to 74, and EPS is down to 467 so far for the first 9 months. And again, you can take a look at the contribution mix shifting dramatically, going more towards services slowly and steadily. Now over a quarter of the revenue is coming from services, and every single market obviously declining a little bit. So Americas down to 71, Greater China down to 57, Japan down to 18, rest of Asia Pacific down to 23. So that's the only market that's pretty flat on a year-over-year basis, but every other market, especially Americas, with the biggest decline down to 122 billion compared to 129. But it's all just numbers at this point. I mean, the company's doing so much in revenues that, some years obviously are going to be a little bit of contracting. Balance sheet, we don't have to go over that. Again, very strong balance sheet for the company. And if you take a look at the EPS expectations for this year, the company's pegged at a little bit over $6. And right now, of course, trading at 186. We're looking at a P multiple of 31, which even for Apple is a little bit high. I would love to look at it for at closer to 130 when it's now starting to trade at 21.6, 21 and a half, closer to 21. That's when I would be like, a lot more interested. Maybe like, let's just look at 160 though. Like 160 is still going to be at 26.6. Maybe I can start a position in the 160s, but I wouldn't necessarily dollar cost average heavily unless it's in the 130s or sub 130s. So those are going to be some levels to really be paying attention to. We're getting a pretty big technical breakdown for Apple as well, below that 21 EMA. So Next support really is going to be 177. So this right here is going to be that level to watch as a very strong support for Apple. And of course, resistance stays put at close to 197, close to $200 per share. That's pretty much the all-time high. And then right now we're kind of opening in the middle of that range, and we'll see if actually Apple gets bought up or if it gets sold off even further. But like I said, right now we're kind of like in that middle of that range. The support level is going to be at 177, down to as low as 157, 159, kind of in line with those moving averages. A level where I could see myself starting a position, and then of course 120s and 130s, super heavy dollar cost averaging levels. So hope you guys enjoyed this video and a complete update on Apple. Let me know in the comment section down below, what do you think about this company, and are you buying, selling, or holding? Again, make sure that you drop a like, subscribe to the channel. Link to our Discord page channel is going to be down below. As always, happy investing, and I'll see you all in the next video.